Joining me right now with a look at what it would really mean to default here in the US, as well as we're going to talk about what's going on internationally. My friend Hans Humes, he's the CEO of Greylock Capital. And let me just say, Hans, you have been to probably every hellhole on earth, and you have helped them sort of piece back their economy bit by bit after they have defaulted. So if there's one guy we need to talk to about what this would mean for the US, God forbid, it would be you. Good to see you.
It's always great to talk to you, Trish. I'm happy to be here.
So, I don't like talking about the threat of a U.S. default. I mean, it feels like it comes up almost every year, but right now it's feeling a little bit different. And I think that's just because of the sort of, the voraciousness, shall we say, on both sides of the aisle right now, where I'm like, okay, maybe somebody really could do something stupid. What would it mean if the U.S. defaulted on its debt?
Well, you sort of made a comment that I go into places and put the pieces back together, be it Greece or Argentina or even Russia in 1998. This comes apart, we default. There's no pieces that we're going to be putting back together. I mean, the U.S. is really different. We are the major center for financial transactions. The dollar is still the reserve currency. All the things, I mean, if you think of the financial system of being a matter of confidence, that people rely on certain totems of, underpinnings, pillars, there needs to be a common belief and a common trust. And if I was at a conference in Boston last weekend, and had sort of one of the speakers went through a history of how the U.S. put together the system that basically the world functions with now. If we defaulted, there's an incredibly high likelihood that the result wouldn't be the Great Depression. It would be far in excess of that. It would make the Great Depression look like a mild recession. So what we're playing with is actually, it's not, we can be very focused on our domestic, perspectives.
Right. Which will take you down the rabbit hole any day of the week.
Yeah, but you can also go down the rabbit hole in sort of this idea that money, credit, borrowing is reliant on a common belief of that these things have certain values. And if you pull this away, that the U.S. is sort of the center of this, mm-hmm. it's going to be catastrophic. I mean, there's no way around it. There's no pieces to put back together. So one, as a country, I think we need to look at this and say, hey, let's pay attention to these things rather than some of the other things that seem to chew up political discussions in our country. And secondly, keep an eye out for those international actors who really, if they can undermine us, they don't really care about the damage that it does to the rest of the world. It might play to their benefit.
Sure. I mean, and that brings us to China. It brings us to Russia. I mean, some of these countries that we are increasingly concerned about and increasingly have shown that they want to be, if you would, the hegemonic power of the world. A lot of people say, oh, why are we doing that? Well, why are we doing that? Because you know what, all those cheap goods that you get to buy at Walmart, or the fancy home that you get to build on a relatively low interest rate, which is now going up. But, a lot of that lifestyle comes from the fact that we are the world's reserve currency, which thereby sort of de facto makes us the hegemonic power of the world. So knowing that China wants to replace us long term, knowing that Russia just really doesn't like us, what do we need to be thinking about as these headwinds come our way? And what are they doing actively right now, from what you see in your world, to destabilize us?
Yeah, I mean, it's a good question. We have to sort of understand that we're not in 1993, right? In the back of the, Berlin Wall coming down, Russia trying to open, China really not being on the radar screen. And China does chew up a lot of rhetoric in DC around their participation in the financial markets. And in my world, they've been a big lender to emerging market countries. They've been an alternative source of funding for African countries that are actually important to us, certainly in Latin America, which is in our hemisphere. We get displaced quite often. And then on the policy side, there's a ton of focus on the Chinese being a primary lender. And, just to explain the difference between primary lending and then the secondary markets, the primary lending is the Chinese lend in the bond markets, let's say. I'll take it to our thing. If a country issues bonds in our market and I buy the bond, I'm giving $1 of my money to the country, they'll pay me back the dollar with the interest rate. After that happens, we have a secondary market where people buy and sell it. And when countries get into distress, it trades at a big discount. So we're doing a pretty good job on in the headlines, looking at China from the point of view of being a primary lender. Now, where
Okay.
Russia is, we're seeing them as a political opponent. But somehow or another, the people in DC don't understand in the secondary market, there's a channel where a country can go in through fronts in countries where a lot of Russian money has been flowing into, to get involved in the secondary markets. So they buy the country's bonds like Ghana, Venezuela, Sri Lanka to some extent at a big, big discount where they get the same rights and obligations as you do by lending 100 cents on the dollar.
So I'm going to break it down just for a second. So in layman's terms, no, I mean, and look, I started my career in sovereign debt markets at Goldman Sachs, as you know, and sometimes the viewers remember. But anyway, just to kind of just simplify it, it's like, remember in 2008, we learned a lot about secondary debt markets, right? Because people were like, wait a second, my mortgage isn't held by Bank of America? No, because what happened was Bank of America issued the mortgage and then it's traded and retraded in what's known as the secondary market. So what you're referring to, Hans, and by the way, Hans is like the guy. I call you sort of like the banker to the world in that sense. Like you've just been in the nitty gritty of really understanding how these countries finance themselves, specifically, by the way, in this secondary market, as well as the first one as well. But in other words, they're trading this stuff. And often when countries are not doing well, just like if it didn't look like you were going to pay your mortgage on time, the debt starts trading for less and less, right? So then if you're a smart investor, you can come along and say, oh, I think you probably are going to pay that mortgage. So I'm going to buy up that loan for pennies on the dollar, and I'm going to collect your mortgage payment every month. I mean, it's the one way I can think of sort of explaining that.
I'd take it down to something a little bit more sort of something that people can relate to. Let's say you don't pay your credit card bills for 6 months, you default to your credit card, and then they sell it in a secondary market, which they do, or you don't pay your taxes, and somebody can go and take your house. They'll buy at the nominal claim of the debt. So they'll pay, let's say, 2 or 3 cents. You're sitting in your house. They come and they paid, $20,000 or $30,000 for $1 million house, and they take your house. And so what these secondary markets and sovereign debt do is give a channel to a disruptive actor who wants to act against our interests. Because the big difference for China is they have a sort of symbiotic relationship with us. They produce stuff, we buy it. They're interested in stability. Long term, they kind of want to displace us. The Russians, they just want to mess with us. I prefer to use another word, but
you're keeping it clean. You're keeping it clean. It saves me from having to go beep.
And the problem in DC is people don't really understand what the opportunity of the secondary markets happen. And if you look at a place like Ecuador or Ghana, they're really instrumental for the US running operations of all sorts. If the economies of these countries get disrupted, it's really bad because it will make the background noise and the disruption could create some real havoc for our ability to do things.
Give me an example. So you say, okay, we're over there in Ghana. Or why are we there?
We are there.
What do you mean? Like what operations?
If you look at it, Western Africa, look at Burkina Faso, you have a lot of Islamic ISIS activity in the north of these countries. So the U.S. embassy there, obviously we need a base, a safe haven to sort of coordinate what we're doing to blunt. I guess in this day and age, we forget about Islamic terrorists, but they're really active in Africa. Yeah. And for us to be able to run these things, or a lot of the semi-terrorist drug operations, we need a foothold in a place like Ecuador, or in a place like Venezuela. Do we want to deliver withdraw so much that we allow countries for pennies on the dollar to step in and have a very strong, not just a disruptive presence, but a presence on our doorstep.
And look at the intention, and specifically, just because I'm familiar with it, Venezuela, I mean, we've restricted that secondary debt market so that basically, if you own the debt, as I understand it, you can sell it, but you can't buy it. Like as an American, right? Like you can't go out and buy Venezuelan debt. So consequently, It reduces the number of buyers, the price sinks. If Russia's willing to buy it, well, then before you know it, they're going to be taking over PDVSA, and suddenly, right there in our backyard, you get a very large Russian presence, which I don't think really gels with the whole Monroe Doctrine thing in our hemisphere.
No, I would agree, and I do feel that our sanctions policy really does need to be rethought. I mean, we applied the same trading ban on Venezuelan bonds to Russian bonds. So there was a situation, I might get in trouble for saying this in public, but there was a situation where the Russians were going to have to pay coupon payments to Western creditors, including a lot of U.S. funds. Mm-hmm. And we decided that instead we would impose a secondary ban, force the Russians into default. And the Russians are actually pretty smart. They went through this post-98 in Ukraine.
Right. That was the Russian debt crisis. That was when they defaulted, but it was an internal default.
No, it was external as well.
Okay.
They defaulted on everything. They treated what they issued as the Russian Federation as different than the ex-Soviet stuff. Right. Again, I don't want to go too far in the weeds. Okay. But they did learn how to buy back bonds in the secondary market. Then going into the Ukraine situation, which I think that we made worse by not getting in front of it. I mean, as I've told you, I was in Ukraine in 2012, and the opinion of the Russian-speaking Ukrainians in eastern Ukraine was that these Russian activists were like nutcases, and the United States just didn't manage it. They allowed the Russians to sort of move in there and get into the Donbass region. But at the same time they were doing this stuff, the Russians, there was a debt restructuring of Ukraine in 2014 that the Russians held out of, and they weaponized the secondary debt market to sue Ukraine. So in the case
wait, let me back up. So there was this bond, right, offering, and in the secondary market where it was traded after the fact, the Russians were there buying it up cheaply.
They bought a bit of it, and then there was about $3 billion that was primarily in Russia. But they learned to weaponize. They learned how to operate.
So then they were like, okay, well, we're in control because we hold your debt. We have your house, right? We can take your house if you don't play ball.
House in this case, right? But they didn't. I mean, I don't want to get too far in the weeds. They have to buy enough of it to actually take the house. So there's a certain percentage depending on each bond. But it's really funny because we're very, very well, I think everybody in the United States now knows who the Wagner Group is.
Yes.
Okay. So
I mean, everybody. I keep hearing about it, and then there's something about, like, I guess the chef at the Wagner Group is coming out saying this, that, and the other. And I'm like, this is funny that it's like part of like regular public conversation.
The Russians are running the equivalent in the financial markets under the surface that, via the secondary markets, are running the same kind of disruptive operations that the Wagner Group is running in the open. You look at Mali, where the Wagner Group has moved in, you have Wagner people in all the hot spots, but behind the scenes, you have a very sophisticated, you say what you want about the Russians, they're not dumb and they've learned. They're weaponizing stuff that we're not paying attention to.
Okay, so Ukraine debt being, I guess, I don't know how that's worth anything, frankly, now, Hans, right? Because the country's just a complete mess. But Venezuela, we know, is an example. Some places in Africa. So they're ratcheting it up, having more influence in a lot of places than we would certainly like. What's the answer for us? I mean, what should we be doing? How do we change this so that we limit their ability to disrupt?
I mean, I think it's a matter of just understanding the risks, and policymakers in the U.S., you get the sense that D.C. operates very well when there's a crisis, or it can operate reasonably well. But that there has to be a crisis before they really pay attention. It's not a secret that the decision-making process in D.C. is can be called inefficient. And what comes out the other end when it goes through the bureaucracy might not really be targeted. It'd be good to sort of that there be a bit more financial expertise in the echo chamber there to foresee risks. And also, I would say net, you're overreacting to China on their primary lending. You're really creating so much stuff and so much narrative that sort of on the surface you're demonizing the Chinese. Be that as it may, but they'll back off and it's hard to negotiate. And then there's a blind spot. Like fundamentally, if I spent 2 or 3 minutes with just about anybody who watches your program and explain primary, secondary markets, they're going to understand it. It'd be good if people in DC have that kind of ability as well, because there's a leveraged way. Leverage means you can literally use something and with less force get the same effect on the other end. But the guys who are pushing on that lever are people with their intent is to disrupt us. The Chinese might do it at some level. The Russians are full on now. We can debate why and how we got here with Russia. But as far as I'm concerned, I'm an American. These guys are working against me.
Well, I mean, and you're tapping into something that has been a frustration of mine forever, and that's that you don't really have people that understand a ton when it comes to finance and economics. They understand politics and they like politics, and I've seen it in the media business as well. And so what you're asking them to do is pretty darn critical, and it almost feels like you mentioned a weaponization. It's almost like there needs to be a militarization, if you would, of understanding the importance of debt markets, sovereign debt markets, secondary markets, and saying, okay, we need to get serious about this because this is very much affecting our position in the world. So there's kind of a military, if you would, component to it, right? A national security component that may be overlooked because, I don't know, you say secondary debt markets, like, woo, what's she talking about? What's he talking about? It's like scary stuff. But the truth is, it really matters. And if we don't have people that get it, that's actually a pretty dangerous thing.
Yeah, I think it's important that we sort of put this out in the open. I think it's also important to realize that at the same time, we should be making rational moves as a country to maintain our status as a financial center, the confidence. This all ties in with the possibility of us defaulting. We don't want to give away what built us up to be what we are today. And you can say the world isn't like it was in 1993, where we're the one superpower. We have more competition now, but be thoughtful about protecting the advantages we have.
Yeah.
Russia, China, they can't duplicate what we've done. I mean, we are quicker at solving problems in the financial world than anybody else. Our system adjusts much more quickly. But think about the financial system on every single level and be paranoid about what doors you might be leaving open inadvertently.
Yeah, for sure. I mean, it feels like there are quite a few open. And as you said, the Russians learned how to deal with this, with their own debt crisis. And we haven't, for whatever reason, it sounds fair to say, like, for whatever reason, we haven't fully just digested how we can use these tools. And we ought to be able to, because frankly, Hans, we still got the best financial markets in the world. I mean, everybody wants to come to Wall Street for an IPO. We are still, despite the insanity at the Fed, et cetera, and inflation, et cetera, we are the envy of the world in terms of our financial markets. So we have the brain power, we have the people. It's just they're not in the State Department, I guess.
I would agree that, it feels like for the last, I don't know how long, we have been taking actions that are really counterproductive to maintain our status on this side. And, we might be playing with matches and risking burning the house down. We just have to be aware that there's some people on the outside with a sort of a bucket of gasoline, happy to pour it on as soon as the one match lights. So,
yeah,
we're doing it
for sure. Hey, really quick, just because, you've seen your share of really messed up places. I know you've spent a lot of time on the ground in a lot of these places. And like I said, you've tried to sort of reposition their sovereign debt markets so that maybe they have some chance. when you consider how dysfunctional they are from a political perspective, and you compare and contrast it with the U.S., look, we're still great. We're prettiest girl at the dance. I get it all, but nonetheless, what do you think is happening? I mean, does it feel worse now than ever before? Does it feel better? I mean, how do you compare and contrast what goes on here in the U.S. with some of the worst places? And gosh, I mean, you've been everywhere, right? Restructuring debt in, I know, Argentina, Venezuela. You were the only American on the Greek steering committee in that whole European debt crisis. A whole slew of places in Africa. I mean, you can name them better than me, but when you think of what we're going through and what they went through, what's the difference?
Yeah, I have to say, in this age of sort of instant communication, the world is becoming aware that we could be as dysfunctional as anybody else. I mean, it's sort of funny. I used to have a good collection of defaulted U.S. bonds that I put up in some of the meeting rooms to remind emerging market country finance ministers that all the defaults, when we were starting out, we did better. So post-Revolutionary War, post-Civil War, the U.S. defaulted in ways that countries are just catching up. Our innovation...
Really? Like, I mean, I've never really thought about that, because you just think of the U.S. as just such this, credit, like, war horse, right? Like, we are just so strong.
I think that Alexander Hamilton, in deciding to sort of incorporate all the state debts and pay them off at par, may have created a sort of moral hazard precedent, but basically provided the foundation. I mean, the defaults that happened on the state level post-Civil War were different. It was outside the federal charter, so it was sort of buyer beware. The buyers of that, we said that these states were operating illegally, you get nothing. But it's, I think that there's still a real feeling everywhere you go that we have a big advantage, that, we might suck, but we suck less than the other guys. And there is culturally just such an affinity, whether you go to Caracas or Tehran, that people like us, despite all the noise that we get on the surface. And there's a respect for the American dream.
Yes, which is rare, and you will not find anywhere else in the world.
Yeah, I mean, nobody wants to go to... It's like people will deal with these other countries because they kind of have to, but I don't want to get into we don't lead with our national interests. And I think that at a certain point that our foreign policy should be a little bit more transparent. We always try to code it. Wow, I'm really going to get in trouble. Human rights, this and that. I mean, just be open about why we're doing stuff. I think people would respect.
No, I mean, I remember, I won't say his name, but there was an energy analyst, oil analyst, big deal, who once said, I remember when we were going into Iraq, and Iraq obviously not being a very popular war, especially now, of course, but he said, well, what do you think this is about? It's about oil. That's it, right? Like, and, there's a reason why we're in some countries and not in others. And to your point, maybe the transparency. I've often said with Venezuela, look, I know we don't like their socialist system. Let's try and help them with that. But for goodness sakes, I mean, they're right there in our country. They're a very similar culture to us. We ought to be able to think this through, because you know what? They matter. They're sitting on more oil than Saudi Arabia. So, hey, guess what? It is about that.
The limited experience of Chevron getting a license to do business in Venezuela has forced the Venezuelan system to start operating in a more transparent ways. There's been a huge shakeup in PDVSA. Everybody who's in the business community there is like, wow, great, let's do more of this. And meanwhile, we're sort of, trying to manage the perceptions of political risk. That's fine. I mean, it feels like it might be going in the right direction. It's just, think about aligning our national interest with the national interest of the populations, and it becomes a bit clearer. I mean, we have a lot of political forces that are in play in this country, and a lot of different interests. It would be nice if we could just
look out for us.
Can I say
just look out for us
first? Just lead with what's in our interest, because you know what? We bring a lot of good things. I mean, sure, there's complications politically. We may not manage certain things particularly well, but most people want to deal with American companies.
Yeah, I gotcha. That's why we need a little bit more business in Washington, people with a business background. Anyway, hey, it's great to see you, my friend Hans Humes. Like, you are the guy. So we feel very lucky to have you on the show today. I really just think you've got a super grasp on everything that's going on globally, and your interests are for the U.S. and the success of the U.S. So I encourage people. You're on Twitter. They can follow you on Twitter.
I don't
So
really
check
say
out
much
Hans
on
Humes
Twitter,
on
but
Twitter.
yeah.
Hey, thank you, thank you again. It's great to see you.
I want to say one last word, Trish.
Yeah.
All my skills I've learned through these 35 years will not serve in any way, shape, or form if the U.S. defaults. Wow. Nobody will put those pieces back together.
No, it's for sure true. I mean, I hope people take this seriously. I really do. Thank you, Hans.